Hello, everyone. I am Brittany Jackson, and I am part of the team over at NextGen Tax and Financial Services, where we help gig economy workers as well as self-employed individuals maximize their tax refunds with tax strategy and financial planning. So before we jump into the video, I just wanted to say that this is being specially recorded and put together for the women of And Rise over in Chicago. And Rise is a nonprofit organization that does some pretty amazing work with women entrepreneurs as well as domestic violence survivors and people who are working through trauma, healing, and all of those things. So we're looking forward to hopefully doing some great work with the founder of Rise, Jennifer Ramirez, and all of the folks who are involved with that organization in the future. I'm going to go ahead and share my screen, and then we'll just get started on this presentation. So let's see if I can get this in full screen mode. Okay, so today we're going to be talking about some tax strategies, some wealth building strategies, and kind of what the qualifications are, and then how to access those strategies as well. You see here today on our agenda, we're going to talk about entity selection, building business credit, hiring your children, and then IRAs and UTMA accounts, which are just custodial investment accounts. And we're going to just talk about some of those strategies and how those things work. So we'll start with entity selection. So you see here, this presentation primarily is going to be focusing on sole proprietors and single member LLCs, because these two entities are taxed similarly by the IRS unless you elect another option. So a sole proprietorship is a type of enterprise that is owned and run by one person, and in which there's no legal distinction between the owner and the business entity. And then you have a single member LLC, and those are also taxed as sole proprietorships by default with the IRS. But the LLC has the added legal benefits of the business being separate from the owner, and then also the ability to elect how you're taxed using either IRS Form 2553, election by a small business corporation, or Form 8832. Just on a side note, we recommend a company called InkFile to establish an LLC. They have a great service. It's a really affordable, and they cover a lot of the bases and challenges that individuals might face in forming their LLCs. So first of all, let's talk about IRS Form 2553, and that is the election by a small business corporation. Now, basically what this form does is it allows a single member LLC to choose to be taxed as an S Corp with the IRS. So you essentially go from owner to shareholder when you make this transition. One of the biggest IRS rules for S Corps is that shareholders must take reasonable compensation from the S Corp as a W-2 employee. Other requirements are that the business entity must be either formed, U.S. formed as an LLC or a regular C corporation. And the business cannot have more than 100 shareholders, must only have one class of stock, and then all shareholders must be U.S. resident individuals. Now, when you're using IRS Form 2553, you're simply telling the IRS that you want to be taxed as an S corporation, but it doesn't necessarily change other areas of the structure of your business. So once your business is generating enough revenue for you to take a salary consistently, Electing to be taxed as an S Corp has the following major benefit. Essentially, that is self-employment tax savings. The main benefit of incorporating as an S corporation or electing to be taxed as one over being self-employed is that you save taxes on self-employment taxes. So for each dollar of profit, it could mean as much as 15+% in savings, depending on what the tax rate is for that year. Now, I'll give you an example here. A self-employed individual who makes $100,000 would pay around $15,000 in self-employment taxes. If that same individual earns $100,000 through their S Corp and pays themselves a reasonable salary of around $40,000, then just those $40,000 in wages would be subject to the Social Security and Medicare taxes. So through the S Corp, their Social Security and Medicare taxes would be around 15.3%, which totals around $6,000 compared to the self-employment taxes. So they're saving around $8,000 just by electing to be taxed as an S corporation once they're ready to take that consistent salary as a W-2 employee in their business. So that's something to watch for if you're establishing your business and you do have capital that you're working with and you're able to put yourself on salary right from the beginning, then there could be huge savings. But it's a turning point if you are a single member LLC that you want to watch for in your business, because making that transition might be a good option for you to save. Now, IRS Form 8832 essentially is used in a similar fashion as the previous form, but this form allows you to elect to be taxed as a C corporation, a partnership, or a sole proprietorship, or to revert back to a previous tax classification. The C Corp itself is more beneficial to companies who expect rapid growth or plan to reinvest most of their profits back into their company, because the entity itself is taxed, and then you also pay taxes on salary. So there's a double taxation there. Okay, so now let's talk a little bit about building business credit. That's another benefit of establishing a legal entity, is that it provides you the opportunity to build business credit. And you may want to do that if you need capital in your business, because business credit lines are often 10 to 100 times larger than consumer credit lines. So again, forming an LLC will allow you to build that business credit to secure capital and scale your business. Here are some steps to keep in mind if you're interested in building business credit. This is something you might want to jot down, or just make a time note of this point in the video and you can kind of circle back to it. Number one, you want to make sure that you use your full legal name and business name as they appear on all legal documents and records. You always want to use the same spelling, the same punctuation, the same, you want to be consistent every time you're filling out a legal document in regards to your business or your business records. And that also you're using your full legal name when you establish a LLC or any kind of entity. Second, you want to make sure that you have the proper licensing for your state and your industry. So a great place to find out what the requirements are in this arena is to just contact the SBA in your area, and they have great resources to really connect you in with exactly what you need to have, and they can give you those steps. And oftentimes they have those resources for free for business owners. Third, you're going to want to make sure that you do have a federal EIN and you want to make sure that your EIN filing matches your state filing. So that just comes back again to making sure that you're being consistent about how you refer to your business and, across the board. Your business also needs to have a physical address. So in order to get that physical address, you don't necessarily have to have a brick and mortar. There are plenty of address hosting companies, and so even with our company NextGen, we have a great co-working space. They accept all our mail, and that is our official physical address. And you can find those for just address hosting. You can find those for as low as 30, 40, 50, 80, like under 100, even a month, if you just need that address and not a physical space that you're going to be working in. You also need to establish a business phone number and a business fax. So it's really important that it is a business landline business phone, or a, I think it's VoIP, just something that's official. And then again, you want to make sure that you look into those virtual office spaces to serve those needs when you're ready. You also want to have a branded business website and email. So you can use Google Suites to access both of these things, and it just allows you to set up a website and an official website and an email. So our website is nextgentaxandfinancial.com, and then all of our emails for anyone that works within our company is their first and last name at nextgentaxandfinancial.com. So that's something important. And then of course you want to make sure that you have no judgments, liens, or pending legal actions on the business. And this is a good practice for the business owner as well, because banks often want to know about the owner's financial picture as well, even after you've established business credit. So those are some good first steps and things to keep in mind. Another thing that you're going to need is to make sure that you have a 411 listing, and you're going to want to get a DUNS number, which you actually can get with the company called Duns and Bradstreet. So it is a process to begin building out that position with Duns and Bradstreet, but it's definitely important to start as soon as you can to position yourself for success in your business. So I know I'm moving quickly, but there's a lot to cover, and I just want to make sure that I get through this in a timely fashion, but always just feel free to circle back around or grab notes if there's anything that you need to kind of revisit. So this is something that I get really excited about. I love this concept, and it's essentially hiring your children. So hiring your children lets you shift income that would otherwise be taxable to you at your top rate to your kids where it's taxed at their lower rate or not at all, depending on the amount you've paid them in a year. This also allows your child to contribute to a Roth IRA, as they must have earned income to do so. So they're able to contribute as much as they earn, up to $6,000, I believe. My apologies, I didn't write that number down. Now, a lot of times we ask ourselves, can we afford this? And most likely, yes, you can probably afford this, because most of us are already spend quite a bit of money to provide basic needs for our kids, or we pay them allowance. And once you know the benefits of hiring your children in your business, you'll see it's a great call as soon as you're able to or ready to. And it's also a good way to kind of circulate the money that you do earn through your household again. Now, again, you get a tax deduction by hiring your kids, and I like to say it's a tax deduction on anyway money. That's money that you would have spent on them anyways, right? So let's go over a few examples. So the first example is that your son or daughter, maybe they take a dance class that costs about $150 per month or $1,800 per year. So if you hire your child to, say, manage your social media and file paperwork a few hours per week, and you pay him that same $1,800 in the form of a reasonable wage, then you essentially get to deduct the cost of the dance class, and your child can then pay for their own dance class through the wages that they earned. This also allows your child to begin contributing to a Roth IRA. So there's a number of benefits here that this can provide. So if your child makes $1,800, then you get to deduct that as an expense to your business, and you've just given yourself a huge a huge savings. So $1,800 at the 22% tax bracket would mean that you save $396, and then $1,800 at the 35% tax bracket would mean that you save around $630. Now, here's another example for those of you who maybe are a little bit higher earning in your business revenue. A colleague of ours actually hired her daughter, who was attending college for digital design, to build and manage her website. She went out and got a quote from an agency who had estimated that it would cost about $40,000 for the work that she wanted done. So she in turn hired her daughter and paid her enough to cover 2 years of tuition and room and board. And she saved herself around $14,000 on college tuition that she would have paid anyways. So that's $40,000 at the 32% tax bracket would equal $12,800 in savings. And then $40,000 at the 35% tax bracket would equal $14,000 in savings. And this just means that essentially you hire your children and you pay them a reasonable wage, and then you teach them how to go ahead and take care of those expenses that you might have taken care of for them anyways. So if a child contributes, let me rewind. So I keep mentioning here that by hiring your children and allowing them to gain earned income, you open them up to be able to contribute to a Roth IRA. Now, this is an important concept because for those of us who are concerned with economic mobility, concerned with being able to give our kids kind of a better start or a boost for their future, maybe more than we received when we became adults, or just more than, I'm sure our parents, wanted to give all of us the world, but that's not always the case, right? They can't always give us as much as they'd like to as we're transitioning into adulthood. But let's talk about how big of an impact contributing to an IRA can be for a teenager. So if a child contributes $5,000 per year to a Roth IRA between the ages of 16 and 21, and that money earns an average 10% APR, then by the time they reach 65, they would have more than $2 million in their IRA account. Since they paid the taxes when they put the money into the Roth IRA, they pay no taxes when they withdraw it. This is a way to basically completely transform your family's financial future and guide your children towards becoming millionaires. Because it is something that is far off, and I know it's hard to think about when our children reach 65, but all of us are getting there. And when you think about being able to take these 4 years between 16 and 21 to set your child up to make sure that no matter what you accomplish or don't accomplish, and no matter what they accomplish or don't accomplish, there's the possibility for them to become millionaires. that is hugely impactful. And it definitely takes some long-term sight. It definitely takes some ability to delay gratification and kind of see into the future. But this is how you pass wealth to your children and the generations that come after you, regardless of what your income level is at this time. Because like I said, we all already provide housing, we provide clothing, we provide, most of us pay for a phone for our children. We already provide all of these things for them. So if you have a business that allows you to hire your child, you're essentially creating an opportunity to teach them so much about budgeting and managing funds and managing their income. You're allowing them to save for the future, and you're also getting a tax deduction in the present, right? So it's an amazing opportunity. Now you're going to look to IRS publication 929 to learn more about the IRS rules for hiring your children. But we're going to talk about a few things that you do have to consider and do if this is an option that works for your business and your household. Number one, of course, you must have an EIN and file as a sole proprietor, a single member LLC, or a husband and wife partnership. Number two, your child has to be at least 7 years old to begin working in your business. But with that is number three, you must be able to pay a reasonable wage on a consistent basis at least once per month. And you have to make sure that your child is being paid for tasks that make sense in your business. So you can't pay them for like doing chores, like washing the dishes and that kind of thing, but you can pay them to organize paperwork, do scheduling, do social media outreach. Most teenagers today can honestly probably do a better job at managing social media than their parents. So it's a lot to consider, but it's really an amazing opportunity. Number four, you have to complete the required documentation. So you have to, you have to actually hire them in your business. You're going to have to produce a W-2 for them, and as well as a W-3 to document those wages that are paid. And then you have to keep timesheets and records of work performed. The good thing about that is that your accounting system, like if you're using QuickBooks Online or that kind of thing, most of those provide you the opportunity to track time and track work tasks. Excuse me. All right, so we're going to go on to the next slide. And this is just about IRAs and then UTMA and UGMA accounts. It's essentially their custodial accounts, and they may be called a different thing depending on what state you live in. So let's start with IRAs. Of course, it's very important for all of us, whether we are self-employed or working a traditional job, to make sure that we're planning for the future and considering retirement. And I know that sometimes when we're just making ends meet and really more concerned about putting food on the table and like running our households, that it's hard to think about contributing to the future, harder to focus on the long-term plan, but it's so important. So with IRAs, contributing to your retirement account allows you the opportunity to reduce your tax bill, potentially increase your refund amount, and then you're also deferring income tax on future investment gains because you pay taxes with a traditional IRA as you put the money in. Now, I'm sorry, other way around. you pay the taxes on the Roth IRA as you put them in, and then with the traditional IRA, you're paying taxes at a later date, so you're deferring. My apologies. So your traditional IRA contributions may be tax deductible, and then if they are, you'll receive a full deduction up to the amount of your contribution limit. And the IRS, they go ahead and publish contribution limits every year on their website. So some of the benefits of contributing to the IRA is, like we had mentioned, you reduce your tax bill, potentially increasing your refund amount. You go ahead and defer income tax on future investment gains. And it allows you to buy now while the market's down and continues to grow. You also can create a tax-free retirement income with a Roth IRA. And then it also may allow you to qualify for the Savers Credit, which is an additional credit on your taxes, potentially reducing your tax liability. So here's an example. A person in the 22% tax bracket who contributes the full $6,000 to an IRA would pay about $1,300 less in federal income taxes. Taxes won't be due on that money until it's withdrawn from the account and has grown significantly. Additionally, you may qualify for the Savers Credit, which would produce up to $1,000 in non-refundable tax credit. So you have tax credits that are refundable and tax credits that are not. So if you expect to owe the IRS, this Savers Credit can definitely help reduce that liability, but it's not going to increase your refund. Let's see. So let's look over here to the UTMA, UGMA custodial accounts. Contributions to these accounts are not tax deductible, but this is a highly accessible way to build wealth for your children, regardless of your income level. And then unlike educational savings accounts, these funds can be used for any purpose when they're transferred over to your child. And depending on the state, these accounts are transferred to your child's ownership at 18 or 21. So what I love about this is that time is really on your side when you're looking at establishing a custodial account. Many of us are entrepreneurs because our desire towards economic mobility. And if you invest just $5 a day in a custodial account from the day a child is born, then considering an 8% average return, they could be a millionaire by age 50. So by doing this, it kind of takes the pressure off for those of you who are considering and working towards building generational wealth and really striving to set your children up for success in the future and to be wealthy in the future. So I'll give you a specific example as well for those of you who have older kids. I have 3 kids. I have custodial accounts for each of them, and I just go ahead and put on an automatic weekly deposit that works for me. I can change it at any time if I have changes in my income. But my daughter is 9. So if I go ahead and contribute $20 per week to her custodial account from now until she reaches age 21, then I would have paid in around $12,000, and considering average market growth, she'll receive around $20,000. So that's how you make your money grow and really work for you and really work for your children. $20 a week is, it may be a lot depending on what your budget is, but it may be totally doable as well, and it might be somewhere in between. But the great thing about this is that time is on your side. So the sooner the better. This, you know, if you need to make a smaller contribution, then the sooner the better. So we recommend the Acorns app for this, for both setting up your IRA and your custodial accounts. It's very user-friendly. It just simplifies everything. They have a great educational platform. It doesn't give you the opportunity to learn a lot about like hands-on investing, because the Acorn app essentially just goes ahead and puts the money you invest into exchange traded funds that they pull together. But it's just a great app as far as simplicity. And if you're self-employed, this is a great way to just get started and kind of familiarize yourself with starting to save for retirement and starting to save for your children's future. The memberships on the Acorn app are as little as $1 per month, and then it's $5 a month for a family account that allows you to go ahead and set up custodial accounts for each of your children. This platform is authorized to provide you specific and general retirement guidance. So that you, when you set up, you essentially go through a little questionnaire about your goals, and they go ahead and make a recommendation for you for your IRA as well as your custodial account. You can go ahead and get life insurance on there. I love it. It's kind of a one-stop shop for retirement, future wealth building, all of those things. Now, if you're looking for investing in individual stocks and businesses, I like Robinhood a little bit better for that purpose, but hands down, Acorns is so simple for getting these IRAs or custodial accounts set up. So just a quick note there, so important to start thinking about building wealth and how you can make your money work for you, and then set your children up for success regardless of what you achieve in your business. And that's what starting to contribute, even if it's $5 a week on the Acorns app, to an IRA and to a custodial account, it's going to take some of that pressure off. It's going to allow you to kind of build up a little nest egg, so that in the future, no matter how much success you have, you're good. You're good to go, and you're covered, and your children are covered as well. So hopefully, you know, this information has been helpful to you. We would love to help you implement these strategies or answer any questions that you have. So you see here, I've put our website, nextgentaxandfinancial.com, and then you can also book a free strategy call with our team. And that site is calendly.com/nextgentax/15minute. And it just gives you our calendar and allows you to go ahead and book an appointment that works for you. Now, let me close this out, and I'm just going to show you all really quickly. We do have a really affordable gig workers tax masterclass, where essentially it's a crash course on these strategies that we just went over and more. We're going to look at tax requirements for gig workers and sole proprietors. We're going to talk about IRS compliant tracking in your business for any deductions and credits you may qualify for. We're going to talk about how you estimate direct and indirect expenses, as well as quarterly taxes. And then we go into how hiring your children, saving for retirement, and using your home office can save you thousands of dollars over the year. So feel free to reach out to us if you have any questions about that. Let's see if I can get back over here to stop this share. Okay, there I am again, right? So anyways, inside that Gig Workers Tax Masterclass, we send you a PDF with live links to all the forms you need, all the websites you need, all the IRS publications. And then we also, look at my notes so I don't forget to share anything with you guys. We essentially just dive deeper into how to implement these strategies and more. It's in a live webinar so that you can ask questions as they pertain to your unique situation. And then we also provide you with the templates you need, the forms you need for hiring your children. We help make recommendations for the software you can use based on your revenue. And then also you go ahead and jump in a Facebook group where you can ask tax related questions throughout the year. And my partner and I, we are just in there to kind of support you and help you implement the process as you go along. So, but of course, all of these things, you can visit some of the sites and some of the forums. There's clear instructions on each of those. All of these things you can learn how to do on your own, or you can get help with implementing them. But the important thing is that you start to take advantage of some of these benefits that are available to you. And yeah, so as always, we hope that this has served you well. I thank you guys so much for taking the time to listen. And of course, just reach out if you have any questions, and have a wonderful day. Thanks so much.